Is this just broadly a de facto tightening that we're seeing play out in front of us?
Yeah, I mean, I think that's exactly what we're seeing. We are finally getting proof, right? The Fed is finally getting proof that they are affecting more than just the housing market. They are affecting the lending markets across the board. Credit Suisse, we still have to deal with over the next couple of days to find out just how far that contagion goes. Yeah. But what has happened within the U.S. away from Credit Suisse had already proved that point, that lending has changed. People are not as willing to be in private equity, venture capital, and lend to, they don't need to. Yeah. Yields had hit a point where they don't need to.
So therefore, Elaine, what have you been doing when you've seen the enormous volatility, not just in corporate debt, but my goodness, in US Treasuries, when we have on one day a more than 25 basis point move that has then become a 4-day straight from the upside to the downside in terms of borrowing costs?
Yeah, it's funny. In times like this, we expect to be really, really active. And it's been a little bit disappointing. Within the Treasury market, we were running neutral in our funds. And now it hit a point where we went to an overdone place so quickly that I don't necessarily think that what the Treasury market is pricing into the market is reality. Do we really think that there are going to be 125 basis points of cuts by January? That seems a little overdone.
But Elaine, that's exactly what our technology viewer is trying to get to grips with. For our viewer, the context is, Loomis Sayles has a storied history in bond management. You've got hundreds of billions in assets under management. And you're trying to read the tea leaves of ultimately what the Fed does in this scenario. Does the Federal Reserve focus more on financial issues, contagion, bank risk, or does it focus more on inflation and some of the concerns there that ultimately means they have to hike rates?
Yeah, I do think that the Fed probably hasn't made a decision, and the Fed is going to watch what happens over the next couple of days. And does Credit Suisse and what's happening there take us to an right? They know more than we do, but they don't know what the markets are going to do here. I think if they were to be making a decision today with what they know, economic numbers that don't lie, but are definitely distorted by weather, distorted by some other exogenous factors, and the amount of fear that's in the market right now, I think that they would hold off. But we could see something happen in the next couple of days that settles the markets down and allows them to do that 25 basis points. I mean, the market right now is saying it's a 50-50 chance. At least that's what the Treasury market is saying. It's a 50-50 chance, roughly, that the Fed is going to cut 25 basis points. I do think Elaine, something that's pretty... Oh, go ahead.
Well, Elaine, no, I want to tie this together. I want to understand why this is happening right now. Let's go to the Bloomberg terminal and look at Credit Suisse, CDS, credit default swaps, trading at financial crisis, above financial crisis levels to ensure against default. This was happening at Credit Suisse in the fourth quarter in terms of client asset outflows, liquidity metrics dropping. SVB happened, and it seems as if everyone suddenly realized again that bank liquidity is important. Why are we sort of happening? Why is this happening Wednesday, right now? What's the catalyst for you?
Well, clearly, when the largest shareholder comes out and says, there's no way I'll put another cent in, you fear that they know something you don't know, right? That I think is the fear that's going through the market. Everything we know is that, Credit Suisse is a bank that had a different type of regulation than SVP. It seems to me to be a very different situation, and it was really all about that lack of confidence. It was all about a lack of confidence for the banking system. And if that reverberates, we're going to see more Credit Suisse, more First Republics. Now, the credit markets don't seem to be saying deep, dark recession and it's happened right away.